Hello, this is Tom Cloud with this week's Precious Metals Market Update. As I do these updates, sometimes things run over because when you're doing something every week, you want to talk about what's going on in those markets. That's what you expect from me, and that's what I want to bring to you. But certainly, there'll be times where you want to know information that and we do appreciate the emails we get in, and we do try to do that. I don't have anything for that today, but I just wanted to say again, if you want a subject covered, just email it to us. You can go through cloudhardassets.com and send me a question that you want discussed, and I'll be happy to do it. But for now, I want to talk about what's going on is these markets are getting scared. They're getting very scared. When we just got the figures in for 2018, and the central bank purchases had gone from 375 tons in 2017 to around 630 something tons in 2018, making the biggest amount ever purchased by central banks since Nixon closed the gold window back in 1971. This is very exciting. As we've talked about before, gold is a tier 1 investment within banks. Real estate is not. Certainly securities are, treasuries, these kind of things. But when a bank buys gold, they can count it at full market value for their reports to stockholders and so forth. So now we're seeing banks that had been afraid of it until this past couple of years back, and we've seen the explosion by central banks because they want to hold gold because they realize the paper fiat currency is going up, and it's going up in a flame. There is nobody in their right mind that can think the US dollar is going to be the first fiat currency, money by decree, paper money, bookkeeping entry, computer entry, currency to survive. It won't be. We all know that. So what do you go to? You go to what the other 28 major markets in the world deal in, and that is gold. That is gold. So what you're looking at now, you see gold up 5%. We're 6 weeks into this year, and gold's up 5%. Now, I've said since my forecast back in December, I was looking at double digits. And now I even think it's going to be, I still think it's going to be over 10%. But now I see a more 15 to 20% year, and maybe a lot higher than that. But when you see the United States claiming to have 8,163 tons, and central banks that don't include us are buying over 600 tons a year, they're going to catch up and catch up fast. My source in Singapore says he's hearing they'll buy at least 750 this year, which would be another 20% increase from where we are right now, another 20% increase in demand. And I don't have to tell you what that would do to price. So I want to say that is the one thing, the most important thing I'll say today. Number two, why has silver all of a sudden exploded over $16 an ounce? And it's up nearly 6% for this year. But things we've been talking about over the last 18 months in particular are starting to peel out. We're seeing palladium that we think is about the top. And any of you that bought palladium on our buy signal in 2015 is now seeing it go from 400 to 1,400. I still think the slowdown in cars, and 18% slowdown the last quarter of last year in China, which has been the biggest buyer of palladium for new cars, clean air bill. So if we have less demand for cars, there's going to be less demand for palladium, and palladium's going to go down. And we still think you should be converting your money from palladium to platinum if you're still holding it. Platinum, we think, it already went to 2,000 an ounce once. Now it's in the low 800s. We gave a buy signal here on this show at 756 about 3 months ago. So it's up nearly $100 over since we gave the buy signal. So anyway, so in summary, silver also with the electric car gaining, it's a long term that you're going to see electric cars explode, but the Teslas of the world and the manufacturing of electric cars in China is going to be the big mover for the next 4 or 5 years. Buy silver early. It has been disappointing. I've missed the price point several times. I'm not going to tell you I'm going to be right this time, but I think I am. I really do. And I do think you need to be buying silver at something this close to mining cost because it protects your downside and gives you almost no downside risk, really, as long as you're talking about spot price. If you buy from us, you got such low commissions, but most of these telemarketers have huge markups, and hopefully you're talking to us first, or talking to them, then calling us and getting a much better price. And if you are interested in storage, we have the lowest storage deal in the world in COMEX approved warehouse. See, that's a mouthful, but I can get you the lowest storage rate in the world. And if you've got, metals you're storing with somebody else, we have a real easy way you become a customer of ours, and we can have that metal moved to your new account at the COMEX warehouse that we have a deal with. And if you want to discuss that further, you can reach us at 800-247-2812. So in summary, the big news now is the dollar did lose a little bit. Gold is rocketed. Silver has rocketed. They're both up over 5% for the first 6 weeks of the year. We see demand growing. Central banks are buying gold like crazy, and we're going to continue to see the price rise, in my opinion, and probably have more central bank purchases this year than in the history of the world. And silver should have a main steady demand from here, not that because of how thinly it trades, JP Morgan and others can short the market and drive it down. But remember, when they went long back in 2000, 2011, silver went from $3 and something to $48 an ounce. So now it's sitting at 16, and we think it will easily triple over the next decade, and probably a lot less than a decade. But even if it takes a decade, that'll still be a nice 7 to 10% a year return. So hopefully, if you're interested in putting your money into an IRA, self-directed precious metals IRA, we can work with you as a representative and broker. Excuse me, we can help you get a custodian, so we can talk to you about that. And certainly with the comeback of the rare coins, we're selling more rare coins than we've sold in years. The premium got so low that now they're a much better deal than they were. But once again, don't be looking out there, these major retailers that are charging 12, 15, 20, 25% markups over wholesale cost when we're doing 3% and below. Plus we're paying for all the shipping. And if you do our warehouse program, we make nothing on the warehouse. You're just paying the warehouse directly for those services. So hopefully we did a catch up this week with this week's Precious Metals Market Update. This is Tom Cloud signing out.